Welcome to Subramani. I've been meeting a lot of small business people, and I realized one thing that very few people have really met a financial advisor, and they have not met a financial advisor in the true sense. They have met people who have sold them some mutual funds or insurance or things like that, but they have not really met a financial advisor, and that's very scary. And when you realize that about 90% of small businesses fail very quickly, or maybe after some time, and many of them struggle not being able to find a succession plan for themselves. Their employees may not be capable of taking it over, your children may not be capable of taking it over. Then suddenly you realize that at some age, 60, 65, 70, you thought that your business was worth a lot, but you're unable to sell it and create it into an annuity, and your business, running business cannot be your annuity. I've done a video saying that your running business cannot be your retirement plan, your running business cannot be your annuity. You will not be able to draw enough money to live off it. You will have to sell it, and at that time, if you have not built any personal financial assets, you could be in trouble. So when you are doing some business on your own, it is very important that you consult a financial advisor who will be able to tell you why you should have your personal assets, why you should have your emergency fund and all those things available, and why you should have money outside of business. Let us look at it positively. You're running a shop, you're running a, let's say, a specs shop in a very good location, and you're doing extremely well. Your neighbor is not doing so well, and your neighbor is going through a bad phase, and suddenly one day he comes to you and says, I want to sell my shop, but it's an absolute emergency. Today is a Friday, I want money by at least by Monday morning. Very, very unlikely that your banker will sanction you an extra limit or things like that. You will not be able to pull money out of your working capital to buy such a big capex of buying a shop next door. The only place where you will be able to pull money out is your liquid fund, right? Or some of your other some mutual funds which you had invested, or some equity which you had bought. Suddenly all that will be called to play because you want to buy this. So this is a very positive problem. The negative problem could be you could be struggling in your business, and you may not be able to withdraw enough money from your business because of COVID times. Let's say your business was owning 5 cars and giving them to different drivers for driving under Ola or Uber, right? So suddenly your business income goes to zero. How will you live? You need money for your day-to-day living, so you will have to withdraw from your liquid fund, right? So all this help will come to you only when you talk to a personal financial advisor in the true sense of the term. Not exactly a product pusher who comes and says, sir, ye NFO hai, bahut acha hai, ye le lo, or please buy this insurance, or your relationship manager who is desperately trying to push a pension plan or an insurance plan on you. No, here you have to have an advisor who will be able to give you a lot of advice on all these things, like planning for liquidity in your business, planning for liquidity or an emergency fund in your personal finance, building personal assets so that tomorrow for your children's marriage and children's education, you don't have to pull out of it. And if you drop dead, your wife will have some money for an emergency before she can attend to your business, right? Or if you have not done any succession planning, your family is going to be stuck with a business where they will not know from whom to collect, whom to sell, how to invoice. They may not know any of those things. Your employees may not cooperate very well with your family, right? All those things you have to worry about. So all the more reason why you should have a good personal finance advisor, especially if you are a small businessman. Don't try to cringe on that. Don't try to tell your financial advisor, oh, I get 30% return in my business, why should I put money outside my business? Absolute reason why you should put money outside your business is also, especially if you're a non-finance person, you don't even know whether your business is doing well. Suppose you quit your business in 2018, at least by 2022 you should be able to withdraw as much as your CTC which you quit in 2018, right? So suppose your CTC in 2018 was 1 lakh per month, or take home was 1 lakh per month. You should be able to pull 1 lakh out of your business by now. At least 4 years you have taken to establish, so you should be able to pull out 1 lakh. Maybe you give your wife 35,000-40,000 rupees for spending. You can start your SIPs again. You create your pension plan. You have to do all this. Also, all the more reason, because after some time, if you convert yourself into a bigger company and you want an outsider to come in, you can't tell the outsider, please come in, put money, I have to collect my 5 years of salary arrears. No funder, no angel funder, no venture capitalist is going to allow you to do that. So all the more reason why you should take a salary. If you're a sole proprietor, doesn't really matter whether you take it as a salary or don't take. There is no tax implication. But yes, if you're a private limited company, there is a tax implication, because your company may not be paying any tax, or company may be paying a lower tax, whereas if you take a salary, you may be paying a higher tax. Don't worry too much about tax. What is important is cash flow. So take your salary, maybe give your wife a salary, or pay her a rent for using the office, assuming that she is the owner of the house, and do all those things. Put some cash flow burden on your business, because if you don't put that cash flow burden on your business, your employees will start treating your money like, oh, this money does not have any cost. Right, whereas there is a cost to your money, so your money should have that respect. So you need to take some money out for your business and be able to, maybe you have an EMI to pay, maybe you have maybe you are planning to buy a bigger house, so you need to make some down payment, maybe you need to buy a better car, whatever be the reason. All that money should come out of your business and start coming out of it pretty fast. That is the only way to put pressure on your sales team to collect better. Otherwise they'll say, oh, we don't need money. They should feel that unless they collect the money, they will not get their salary, right? So the peon should know that if the salesman does not collect money, you will not get your salary. So he will start chasing the salesman, saying collection kitna hua, because he knows only when collection happens can salary be paid. So putting pressure on your employees, financial pressure on your employees, because you need money, is very important. So all the more reason why you should withdraw regularly from your business. So only if you get a good when you start your business, you need a good lawyer, you need a good chartered accountant, you also need a very good personal financial advisor who will be able to tell you all this, who will be able to force you to make a plan, who will force you to write your will, right? Suddenly if you die, drop dead in your business, your business has to be taken care of, your personal life has to be taken care of, your spouse and children, especially if the children are 8 years old and 11 years old, they are going to be of no great help. So your wife will have to suffer all this alone, and if you're a woman, then your husband will have to suffer all this alone. Don't do this, right? So be careful, get a good financial advisor, and only when you have your whole team in place should you be on your own business. And the minute you hit your own business, maybe in 2-3 months, find a good financial advisor. A financial advisor who has just been pushing products to you may not be the best person. You may need a better person. I look at it like this, like you went to a pediatrician for your child, but your child is now 14 years old. You need an adult doctor. Nothing wrong with the pediatrician, but the pediatrician's role in your life is over. Similarly, if you don't have dental pain, you will not go to a dentist. Maybe if you as a man, you may never go to you will not need to go to a gynecologist. As a woman, you will need to go to a gynecologist maybe when you're 12, 13, 14, and even when you're 60. You could need a gynecologist for a very long period of time. So your financial advisor who is just pushing products, or your bank relationship manager, is not the exact person whom you want to consult for bigger things, especially when you're on your own. The other thing is when you're on your own, you don't withdraw. That could be a problem, because your personal finance is suffering. You withdraw too much, and your company does not have enough money capital to grow. So striking that fine balance between the two and saying, okay, compulsorily I will withdraw so much. Whenever there's a surplus, I will withdraw more, and maybe keep it in a liquid account, which your employees don't know. You have 10 and 20 employees; they do not know that your money lying in a liquid fund. That's fine. So removing money from the business is important, but you should remove enough money. Like, it's like milking a cow. You don't milk your cow and find that blood is coming out of the udders. You don't do it that hard. So you just take the milk out, you don't take the blood out. So that's very important. You also have to have your succession plan in place almost the day that you start your business, because that gives your clients also a lot of confidence. Imagine telling your client that in case of an emergency and you can't get through to me, if I drop dead here, my son will do it, my employee will do it, my spouse will do it, something like that. So a succession plan is good even in your head. Also establishing a good credit line very quickly in your whether it's a sole proprietor or a private limited company, because you have had a very good credit score, maybe upwards of 825, and so you have very good lines of credit available for you. Exactly similarly, you have to build a good line of credit for your business also. If you're a sole proprietor, the same thing will get transferred. It's not so much of an issue. But if you're a private limited company or a LLC or LLP or whatever, then you need to establish your line of credit for that. So you need a financial advisor who can play the role of a chartered accountant, a lawyer, and a personal financial advisor, which means can have a look at your overall business and things like that. It is not necessary that he should have any great fancy degree, but you should have enough experience in dealing with small business people. Small business people have some amazing insurance solutions which are very useful for transferring money from the business to the individual while getting a lot of tax benefits. So something called key man insurance. So somebody who should be able to talk to you about all those things, implement those things, and make sure that when you are in your business, you are there in your business in very comfortable zone. And anybody who tells you that today you don't have to worry too much, it's very easy to do business, they're completely wrong. Please understand, you still need your lawyer, your chartered accountant, and somebody to advise you in your business. And very importantly, if you are a business which is dependent on what people think, then you need a very good social media advisor, because if you run a restaurant and one disgruntled employee, one competitor, one neighbor, one cousin, one person can completely damage you by going online and creating a bloody mess about your life. Right? They can say the restaurant is bad, I found cockroach and things like that. You will not know what hit you till people just stop walking into your restaurant or into your service, whatever it is. So you have to be extremely careful. You have to understand terms like SEO. You don't have to, you may not use the social media to attract customers, but you have to at least make sure that nobody is saying bad things about you, nasty things about you. And when you have an online presence, it is very important that you immediately go and correct the image. You go and say, oh sorry, I apologize, next time you come I will make sure this doesn't happen, whatever. Just eat humble pie, do Sashtang Namaskar, but make sure that your reputation is intact. So these things don't happen overnight. These things take a long time to build. It is not necessary that you can learn everything. You may not know how to file your tax return, you may not know how to draft your legal agreements, you may not know how to do your social media. You need to hire experts for all this. So putting together a great team is necessary. Putting together a good personal finance plan in place is necessary. So your team should include a personal finance guy, so that completely rounds your personality. How much to withdraw, how much credit score to care about, how much to borrow, how much not to borrow, how to repay, which loan to repay first. Some of this your business advisors will be able to do. Some of this only your personal financial advisor will do. Don't ignore personal finance if you want to be in the 9%. Just 9% of small businesses are successful. 91% fail within the first 3 years. If you want to be in the 9%, you better get your personal finance in order. Thank you.